Ade Odunsi, AdvisorShares recently launched the GLDE. This is a gold ETF. What makes this ETF different from all the other gold ETFs out there?
Well, what's unique about our ETF is that it gives investors the ability to buy gold, not just with the US dollar, but in the dollar, the yen, the pound, and euro. And that gives you, an investor, a diversification benefit. So you end up with long gold exposure, but also diversified currency exposure, which overall lowers the volatility of your investment, which we think is an attractive feature. And then finally, our ETF is what we could say tax-friendly. So at the end of the year, if you buy and sell an ETF, you end up with a K1, so with a 1099, not a K1, which means that it can go into retirement account. So it's a more tax-friendly wrapper. All
right, let's talk about some of the other currencies that you mentioned. Let's start off with the euro. You also launched the gold versus the euro ETF. This is the ticker GEUR. Now, does someone want to own this particular ETF if they think that the euro is going to crack up again, or they see Ukraine becoming a bigger problem than it already is?
That's exactly right. So this is a nice way to get two themes in one trade. So obviously with the problems in Ukraine, investors looking for a safe haven may look at gold as an investment, but the euro may be expected also to weaken if the problems flare up quite significantly. So with this product, GEUR, you get long gold exposure as well as a short euro exposure in one efficient package. And
back in February, I think it was, you launched the gold versus the pound ETF. This is the ticker GGBP. Pound's done awfully well this year. I think it's around $1.68 versus the pound. So do you think that the pound's going to weaken here? Is that the play?
Yeah, well, the pound has been strong this year. It's kind of reaching, as you said, towards 170. We think that this is really the top end of the range for the pound. We've seen inflationary pressures in the UK coming lower, and this is going to slow down the rate at which the Bank of England thinks about raising rates, and we think this ultimately will weigh on the value of the pound versus the dollar, which will benefit this ETF. So we think from here on in, the pound is likely to weaken.
All right, what about the yen? Because you also have the G-yen, G-Y-E-N. The yen really seems like it's stuck between 100 and 105. Abe has done his best to weaken it, but by now a lot of people thought it would be at 110.
Well, this is the big trade out there. A lot of people have a view on the yen that it's going to weaken substantially. We did see large weakness last year. It stalled this year, but we think that in the next probably quarter or two, as we're seeing the growth spurt we saw in Japan beginning to peter out, we think the Bank of Japan is not going to have many more alternatives other than to enter into another QE infinity, which we think ultimately is going to have a huge negative impact on the value of the yen. And with our ETF, GYEN, being long the gold versus the yen, we think is going to be a winning trade.
All right, thanks a lot, Ade.
Thank you very much.
And thank you for watching The Street.